Hey everybody, welcome back to another Sunday Sessions video. Anybody who's new to the channel, it's just where me and Luke, we run through the markets together, just give you some of the best investment opportunities that we're seeing for this coming trading week. Today I'm going to go first, and as you see on the screen already, I'm going to start off with an Australian dollar to US dollar top-down analysis, rather than just doing what I'd usually do and give a quick couple-minute prediction on what price is going to do in that coming week. I'm going to give you a full rundown on why I believe this market is going to do what I think it is. And then from there, you can make your own educated decision on how you want to go about trading this market yourself. So if we just select this area in here, this is all I'm focusing on right now. We'll change that. There we go. Now inside of this, we see that we have an extreme high all the way up here. So this is what I'm focusing on. So after price traded up to the left, so this is where we want to focus, extreme high. We see that from this point, price never came to penetrate this high. So from the start to the end, we know price moved down overall. So in order for it to do that, we know we've had to have seen bearish structure. So after we have that high set, we come down, we have a low set, typical market structure. And then the next high is, of course, a lower high. I'll label this up and get back to you. Okay, so this is pretty much what we're seeing. So given the 3-box strategy that I always use, we'll go through each wave of this downtrend and actually show you how we could have traded each one. So we have the first impulsive wave, so that's going from the extreme high to the extreme low of that impulsive wave down. That's going to be the blue box. Now to me, we could have argued that, yes, we could have found a position in here because this was unmitigated. But if we look just above, we have some inefficient market structure and this position in here. So that would be my point of interest, these last buys just in there. So this would obviously be our red box or the second box. And then this whole structure in this area, anybody who is familiar with Wyckoff, it's a pretty obvious distribution. We have the liquidity built up in phase A. We come up with the up thrust in phase B, trade back down in phase C, and slowly start that downtrend to continue the next impulsive wave. So again, we have the extreme high, extreme low. We take that box as the impulsive wave. Now in here, this is a tricky one because I probably could have argued that we could look at either this zone, which is one I had drawn out, or we were able to also look at this zone. There's absolutely nothing wrong with having multiple points of interest drawn out. There is no correct one. There is no one that is guaranteed to play out. Just decide where in that impulsive wave, whether it be down or up, is the most likely positions. Maybe 1, 2, 3. I won't go crazy with it, but just decide where you believe is unmitigated. So these are the two I would have had drawn out. Of course, we know now that price never played up to this one. But because we had two, you can argue, well, how did we know it was going to reverse in this one? We will highlight this area as Wyckoff. And what I'll actually do is I'll go down on a lower time frame just to show you, because this one was a lot more obvious on our daily time frame. But typically when price does play up to my points of interest, I am going to drop down to a lower time frame. We'll probably go down to like the 4 hour. We'll do that shortly. From here, again, we have the last impulsive wave that we see on our screens, blue box. Now in here, this one could be difficult again, because like this impulsive wave, there is a couple of zones we could actually use. So we could argue A, price is going to want to come all the way back up and mitigate this distribution, because we know any reversal in the market, there has to be smart money presence. So we could have identified the last buys in this region and had this one drawn out as a point of interest. But then again, on top of that, there is also this, because this is more of a major structural point inside of this wave than anything else. Obviously, there are some pullbacks as we go along, but they're very small pullbacks. Now, this one is quite a deep pullback, which means that we've had a lot of market manipulation. We've had a lot of smart money presence, and beneath that, a little bit of market inefficiency. So to me, those were the two zones I would have looked for anyway. Again, we know what price is doing. It has just tapped in. So as we go lower, we will look into that. For now, let's replay price back to here and look inside and see exactly how could we have got involved in that position. So as we go in, pretty obvious. What are the principles of a distribution? We create a level of inducement, create some liquidity, as we've done around this line here. Once we've done that, we will blow through. We'll indicate that break retest. So not only are we inducing those sellers into the market to sell down from a resistance level, we're also inducing those buyers to get involved on a break and retest. Straight after that, we come through, we blow through the downside liquidity on top of that, as well as starting the downtrend, because as soon as we break these protected lows, we know that bearish structure is more than likely to continue here on out. Price, we know by now, it continued playing out, set us a new low in the market. But for now, let's go to price as of current. Okay, so looking inside of here, like I did at the very start where I just highlighted a box and I said, we're going to focus on the area. Well, we're going to do that again, and we're going to focus solely on this region. Now, when we do focus on this, we do, of course, already have the knowledge that we are within a higher time frame bearish trend. But if we were to look at this solely, all we're seeing is that price has been uptrending. So if I actually use a brush tool here to draw that out, we have our low set, we come up, we set a high, we have a higher low, come up to a higher high, higher low, we break that high to put in another higher high. So arguably this right here is our invalidation zone. So we see here that price has begun to play back down, so we would more than likely make the assumption that until this low has been penetrated, we are still within this bullishness. But we now have the knowledge that we have just tapped into this point of interest here. So had we not done that top-down analysis, we'd have thought, right, well, there's no reason now for price to disregard this bullish structure. However, because we've done that higher time frame analysis, we understand there is a potential supply zone here. So what this tap could indicate is that there is a change in trend, a reversal in trend coming. And me actually analysing this price action, what's happened is that I believe personally, if we took this as our impulsive wave, the most obvious demand zone to me is this candle right here. Now what's happened is price has come down, it has tapped into it, but the issue is that after tapping, after gaining demand from it, it never gained enough demand to put in that higher high, and instead, as you see nicely by this last buy candle in the down move, it has actually come to tap and mitigate this position. So it's showing signs that it no longer wants to run the liquidity highs, and instead it's starting to reach this low set in the market. So what that's going to tell us, if price breaks this low, it's showing its readiness to now start running the liquidity lows. If it runs this liquidity low, it is more than likely then going to run all of the liquidity lows, because if the smart money operators are going to change the trend, reverse the market, they're not going to do so for a very small move. Once they have finished running all upside liquidity that they've wanted to, evident by us tapping into that point of interest, they're then going to start running all downside. Now, there's no reason for them to just break one and then come higher, because A, we're then breaking the structure, so following simple structural laws, we're going against that. And secondly, once they've broken one structural low, they're now profiting from sell positions. So they want all these structural highs to hold because they have sell positions within them. So if they were to come, bring price back past through them, all they're doing is taking their positions out and not allowing themselves to profit on that longer term move all the way past this previous low. So I've gone lower again, we're on the 1 hour now, and as I've done each time, I've gone through a time frame, because this helps me massively. Just select the area you want to look at. Now within this, the information that we have is that we have a high set, a low set, and then we've got this lower high. Now, because we failed to break the high, and we're now actually approaching the lows, we can make the assumption now that bearishness is to come. Now, on top of that, we see price tapped into that point of interest. Now we're on a lower time frame. We can identify this as a distribution, as a Wyckoff schematic. So from our higher time frame analysis, we already have confirmation, because price has traded up, tapped that point of interest, we've got ourselves a distribution confirmation. So in the scheme of the 3-box strategy, we've already been delivered all 3 steps we need. Of course, price has already played out since then. We've already profited on this move. So we need to then decide how can we get involved after that. But I am under the assumption now that price is going to break this low. We're only a few pips away from that, so we can expect on open that it may do the same. So from here, we'd identify that impulsive wave wherever it ends, wherever it finishes. We'll just leave that there for now. And then we already know we have a point of interest up here and also down in here. So we'll have to see how price plays out. It may decide that if there is a lot of supply in the market, it doesn't want to run this liquidity high and instead wants to find supply in here, which to me would probably be this buy candle. So moving forward on this market, all I'm waiting for is to see price penetrate the low here, which I said very close to it. Once it penetrates that low, wait for the reversal of the impulsive wave, look at the correctional wave, get your alert set at this zone, wait to see what price does when it delivers into it. Once it does tap, go to the lower time frames, look for Wyckoff confirmation or any fractal structure reversals, check them out, and then what we can actually do is once we are able, or if we are able to get in a position here, we can then use our higher time frame bias, knowing that if we do get in on a short, let's say at this first zone, we'll be able to refine the stop loss, of course, through the process of confirmation. But rather than us just having that stop loss at a previous low in this structure from this smaller box, we can actually use this largest box, so from the daily structure we're looking at, to set our parameters. So we know that we can have our take profit all the way down here, giving us a 14-1, because we understand that in that daily structure we were looking at, in the higher time frame structure we were looking at, this was the previous low that we want to be surpassed because we are within bearish structure. So I hope you've all enjoyed this top down I've done on the Aussie dollar to the US dollar. That's actually going to be the end of my segment. I just wanted to run through that because there is a few learning points to be gained from that. Now, I understand that not everybody is going to be a smart money trader or an institutional trader, but just take away the simple structural laws that I gave to you. Use your top-down analysis, understand what that structure is telling you, set out your protected lows or your protected highs, set out your lower lows, lower highs, whatever that may be. Understand simply what the structure is telling us so that when we go lower and when we do look to get in on a trade, we understand where price wants to move longer term. So as I said, that's going to conclude my section. I'll pass you over to Luke now, who's going to run through some pairs himself.
How are we getting on, people? Luke here. I hope everyone's okay, and I hope you enjoyed James's full top-down analysis on the AUD USD pair. I think he has provided you guys with some brilliant points, giving you a short, medium and long-term bias on the pair. Today, I'm going to go over the Great British Pound to the US dollar pair. This is a pair that we traded last week. I did do analysis on this pair last Sunday, on last Sunday's sessions video. So if you want to go and check that out, you can check my predictions and you can see that my predictions were in fact spot on. We did actually capitalize on a 100 pip swing earlier on in the week just gone, which was great. And now we are looking to dominate the markets once again and jump in on another short position. So if you didn't watch my analysis last Sunday, I'm just going to go over it quickly and briefly. So as you can see, we've got clear bullish trend here, clear bullishness. We have bullish structure. We have higher highs and higher lows. Then we have an area of consolidation or distribution, depending on how you look at the markets and your strategy that you have in place. And then we have the start of a lovely bearish impulse. Now, this bearish impulse is evident as it's provided us with clear lower lows and lower highs, giving us those structural points to work with. Now, if we just move down time frame, so now looking at this pair on the 1 day, we can see this bearishness a little bit more clearly, and you can see exactly where we entered. So we got this 100 pip swing with a 25 pip stop loss, giving us a 4-1 RR, which was brilliant. We gained 8% on this trade as we risked 2% per trade. And my reasoning for entry where I did was basically looking at the structural highs and structural lows. So we were looking for that clear rejection, which we got, which showed signs of the end of the retest and the start of the next impulse on the higher time frames. And then what we did is we delved deeper into the market, looking at the lower time frames and finding a specific entry to take full advantage of this great swing. So as you can see, we've got clear bearishness, we've got lower highs and lower lows being put in the market. As you can see, this high here has been set lower than this one, which was great. This was great news for us. And again, diving deeper into the markets and looking at the 4-hour time frame now, we can see how the price was putting in that legwork. It was putting in that clear bearishness. So this was more evidence for me that it was the start of its next impulse. So the initial retest had finished, this being the retest from the higher time frames, and then this being the start of its next impulse coming down. Now, as you can see, if we zoom in a little bit more, we can see that this high here was actually lower than this one. So that was my first piece of confluence. And then the low that it went on to produce was lower than this one. That was a complete break in structure. And that told me that bulls were no longer in control of the market. The retest had finished. And this was in fact the start of its next impulse. So what did we do? Well, we waited for the end of this retest here and then took advantage of the next impulse going down on lower time frames. Again, zooming into the markets, now looking at the 15-minute, you can see that we did in fact get in on what I thought was the end of its retest and the start of its next impulse on the lower time frames. But price did in fact continue to go up. Stop loss was nearly activated, but as we allowed enough room, it didn't in fact tap into that, and it started to produce its next impulse going down. Now, if we use the Fibonacci to get some added confluence, you'll see that price actually tapped in to the 38.2 perfectly, which is considered one of the golden ratios. So as you can see, price drove up, tapped into the 38.2, and then as we can see, that was evident to be the end of its retest on the higher time frames and the start of its next impulse going down. We then held this trade, but as you can see, take profit was achieved later on in the week. So now that I've gone over the trade that we capitalized on earlier on in the week, I'm going to run through my analysis for this coming week and show you exactly what I'm going to be doing and where I'm going to be entering. So obviously looking here, we can see clear bearishness. I want to see price break this low here, as this would be a continuation in this bearish structure. Now looking at the higher time frames, is that possible? Do we have any points of interest? Do we have any areas where there could be some kind of interruption in this move? Well, no, I can't see anything. The only thing that I will be keeping my eye on is this low that was produced here on the 1 week time frame. But as you can see, we've got plenty of room until price hits that point. So we could in fact capitalize on multiple swings throughout this whole process. So again, looking at the day time frame, now that we have ruled out a major point of interest and an area at which price could be interrupted, now we need to look at how we can capitalize on this swing here, as in order for it to continue this bearishness, we know that it must fall down and break this low here to continue that bearish structure. So when price falls, we know that it has to come back up, it has to retest before taking its next impulse down. It can't just be a sheer drop, and the same applies for any rallies going up. There has to be some kind of retest coming down slightly before taking its next impulse up. So we can actually expect price to maybe come down slightly, take a retest, and then take its next impulse down. Now out of that, where would we be looking to enter? Well, I would be looking to enter at the very end of its retest and the start of its next impulse, as that will make my stop loss as safe as possible, as it will be above a structural high, and then I'll be able to ride that complete impulse down, taking full advantage of that swing. So we still have confirmation of bearishness, as this low here was broken, which is great. Price is actually sitting underneath this structural low here on the 1 hour time frame, so that's great for us. So what we need to do now is actually be patient, wait for price to come back up, start to take its next retest. Once that retest is finished, then we can look to take that impulse down. Now, you might be wondering, well, when is that retest going to happen? When is this retest going to happen on the higher time frames? And how long do you reckon we're going to be waiting before we can jump on this next sell position? Well, as you can see here, price has in fact failed to break this structural low, which tells me this could be the start of its next retest going up. Now, that alone isn't enough confirmation to give me that bias. What we'll need now is to see price start to put in bullish structure. As you can see, we've got a higher low here and a higher low here. So as long as price comes up, breaks this high here, producing a higher high. That will give us higher highs and the start of higher lows. Now, realistically, this will continue until the retest is finished. And then what will happen is we will see price fail to produce continued bullishness. And as soon as we start to see price produce bearish structure, so lower highs and lower lows, that is when I'll be looking to jump in on my short position. Now, another thing we can use as added confluence is using the Fibonacci. So look in here, marking the start and end of an impulse, this being the start, this being the end, assuming that this is the end, as obviously it's failed to break lower, so I'm guessing this is the end of the impulse. We can get a rough idea of where price could come up to before starting its next impulse. So realistically, what I will do is I will mark out the golden ratios, so the 38.2, the 50 and the 61.8. So I know that realistically price should rally up to this point, producing clear bullish structure, rally up to this point, consolidate, distribute, whatever you want to call it, and then it will start putting in those lower lows and lower highs, giving us that clear bearishness and the next bearish impulse that we want. So if you are watching this video, I want you to keep an eye on this area. So take a note, we have a peak of 1.3617 and 1.3590. Now draw this box out as I have done, and I can guarantee you price will come to this point and then start to take its reversal. What I'll do now is I'll draw out the path that I think it will take, and I'll show you exactly where I'll be looking to enter. So I believe price is obviously going to be producing bullish structure like so, higher highs and higher lows. This is great, lovely, just what we want. It will tap into one of these areas. Let's say it's the 50. It will then come down. People will be like, yeah, it's going to take its next impulse up and break above. Oh, no, it doesn't. It fails to do that. And then it might consolidate for a while like this. And then eventually bearish structure will be starting to get put in. So we will see price come lower like this. Now, when this does happen and when we see clear bearishness, so lower highs and lower lows, that will be my first piece of confirmation. And then what I will do is I will draw out my neckline like so. And then once these structural bullish lows and highs have been broken and price is below my neckline, I will then look to get in on the end of the next retest and the start of the next impulse. So from this point, we could probably expect price to come back up, retest. And this is exactly where I'll be looking to enter, right here. And then we'll see price come back down. So as soon as I see that bearishness coming back down, the start of its next impulse, I'll have my stop loss set above a previous structural high. And then I'll ride this trade down until I see fit, ensuring that I have a good risk to reward ratio. I've implemented good risk management with my trade, and I've set my stop loss above that structural high like I mentioned. Now zooming out and looking at this pair again on the 4-hour time frame, we can see how that little swing that I predicted and that I want to take part in is just a tiny portion of this long bearish move coming down. Now, if you remember at the start of the video, I said I wanted price to come down and break this low. So you can see they've got a long bearish swing that we can capitalize on long term. So if you can jump in on an area like this and ride this whole move down, you are looking at a hefty amount of pips and a brilliant percentage return. But me as an intraday trader, I look to capitalize on multiple smaller swings like so. Now, to keep this video short and sweet, I am just going to be analyzing this pair on this Sunday sessions video. If you want to see more of my analysis and you want to see the other pairs that I am looking at throughout the week, then go to the description and click on our Learning Lounge group chat link. I'll be posting all of my analysis in there. It is completely free to join, so you can take advantage of everything that me and James are looking at in this coming week and the swings that we're looking to capitalize on. Now, I hope you guys have enjoyed this video, and I hope the analysis that both me and James have provided makes some sense to you. I wish you all the success this week, and I hope you can capitalize on this swing that I'll be taking part in. If you guys have any questions, please leave it in the comments below. And again, if you did enjoy this video, make sure to leave it a like and subscribe to keep up to date with all the content that both me and James will be producing throughout this month and the coming year. Thank you guys for watching, and we'll catch you in the next Sunday Sessions video.